I am Jeff Dorse. I'm the SALT leader for Malden and Jenkins. For you guys that aren't familiar with Malden and Jenkins, we're a top 100 CPA firm and we're based out of Atlanta. We have 9 locations throughout the Southeast. The white paper itself is branded STAX, that is Sales Tax Simplified, so STAX the acronym. And you can go to salestaxsimplified.com. Most of you probably did to download the white paper. STAX is a division of Malden and Jenkins. That is our sales and use tax return preparation services division, and it's branded that way. So that's, in case you weren't familiar and you didn't catch on to that, that's what that is, and that's why the white paper is branded as STAX. But otherwise, this is not necessarily meant to be a sales pitch, so I'm not going to harp a lot on Malden and Jenkins or Sales Tax Simplified, but that's kind of explaining what it is and why you see what you see. If you guys have any questions along the way, I mentioned it earlier, but please stop me. As far as the white paper goes, so this white paper is focusing on sales tax. It's focusing on it from the standpoint of, if you're an e-commerce business, what are some of the key takeaways, key 10,000-foot view things you're going to see, you're going to hear, and you're going to want to make sure you're on top of. That's the goal. It's very high level. And I do that because, we could write, when we do the introduction, we could write 25 pages on any one of these topics. And we could write and talk all day long. But what happens is we tend to lose people. So it's much more effective to have the high level view. And then if you guys have a certain situation where we need to dive a lot deeper, we'll do that offline, or we can have a whole nother section related just to that. But we try to do this in a way that we don't lose everybody. We keep it interesting, but we still get the point across. So it's about perspective. Just keep that in mind as we go through this. Let's see. Okay, one more joining us. So I'm sharing my screen right now. You should see the white paper. You guys should have a copy of it already. If you don't, we're going to email it out after the webinar. So you'll have it then, or you can go to the website and download it. First page is table of contents. These are the high level things that we're going to talk about. Okay, this is just your introduction. We're going to go over Wayfair and economic Nexus. And again, I've done a lot of coverage on Wayfair in the last couple of years. I don't want to dive too deep into that today. Just talk enough about what it is, why we're here, and moving on. But you got to mention it because that is the reason we're here. I'm going to talk about knowing your business and knowing the business details, what you do and how you do it. In a lot of cases, how you do things affect your sales and use tax obligations, not just what you do. And so we're going to talk about that a little bit. Once you know your business details, we're going to talk about some advisory services you're going to need. So to get your sales and use tax up and running and your collection up and running, there's going to be some things you need to know. And so that's where the advisory services are going to come in. Then we're going to jump into some technologies. So you're going to need technology. There's very few people out there anymore that is handling their sales and use tax collection and filing obligations that do not use technology. Technology is our friend, and there's a lot of good tools out there. So we're going to go into those. Then we're going to talk about sales tax calculation engine, sales tax compliance tools. Those are technologies. They do belong in the technology as a must section, but they are so important, I'll put them in their own section. We're going to breeze through them in a high level, but we can talk all day about those. Then we're going to jump into the sales tax return preparation and filings, because once you collect the sales and use tax, you're also going to have to file the returns. We're going to talk about some tricks of the trade, some things you can do both in-house with some software companies or with your CPA firm, and kind of when that makes sense to do each of those. And then lastly, we're going to talk about time goes on. And that's just an additive say, okay, what do we do now? This isn't a process that you set, you build, and you forget. So we're going to talk about some things you need to make sure you're paying attention to. Then we're going to summarize it. And in the summary at the end, we're going to try to go over some questions, let you guys talk it out with us. It's your opportunity to ask anything to me specifically. If we can answer your question today, I'd love to. If not, I can kind of point you in the right direction, or we can set up a time afterwards. But today is really supposed to give you guys as much out of this as we can, and that's the goal. We're slotted for 30 minutes today. We're already a good chunk of that into it. We will talk this out as long as it takes. So if we're having a good conversation, we may run over. If not, we'll cut it off and we'll move on. So, all right, that's my introduction. I'm not going to read through this. You can see this is somewhat wordy because it is written from a standpoint of it's a paper. It's a white paper explaining this. So I'm going to talk about these at a high level point of view. If you have questions, again, jump right in. But e-commerce So e-commerce is a wide umbrella that encompasses, in my head, anybody that makes sales outside of a brick and mortar walk-in capacity. So that could be a retailer making sales online. You could have a phone ordering system, mail order systems, and anything in between, right? You could get emails, shopping carts, you can be a boutique. All this kind of good stuff creates a business transaction where the important factor there is that you are reaching a demographic outside of somebody walking into your brick and mortar store. And that's important characteristic and thing to think about, because Wayfair and Economic Nexus, and the reason we're talking about it is that technology in the world we live in today makes it very easy for us as businesses to reach demographics that we've never reached before. And that's very important because 20 years ago, prior to the internet, I've done some Wayfair slides and presentations where I have a good graphic that shows how fast time changes. And it talks about when the U.S. Supreme Court cases established physical presence and all that good stuff, and how we transact business. And then what has happened since then, how fast times have changed to where we are now, and to why Wayfair is a big deal, and how easy it is for a business to reach new demographics. So that's a big deal, and that's what this page talks about. As far as Wayfair goes, I'll try to breeze through it, but Wayfair is the U.S. Supreme Court decision. So that is the online retailer, the furniture retailer, and they sell a lot of other stuff. I believe our kitchen sink came from Wayfair at the house. So you can buy a lot from Wayfair. But Wayfair was not collecting sales tax to orders for its customers shipped to South Dakota. South Dakota's sales and use tax statute said if you have certain characteristics, which were a certain dollar of revenue in a 12-month period or a number of transactions, we think you have nexus with our state and you have to collect sales tax, and you have to file South Dakota sales tax returns. And Wayfair disagreed. Long story short, it made it to the U.S. Supreme Court, and the U.S. Supreme Court decided that, yes, you can create a sufficient relationship with a state without being physically present if you create enough of an economy, so enough business, right? And that's where the term economic nexus comes in, to where you are responsible for collecting that state sales and use tax if you meet whatever the thresholds that state has determined to be, and they've passed on their statute. So that was kind of that's a big deal, because that's a change in the way we do things. That was a change of the way sales and use tax was administered. So Wayfair is a big deal. That's basically what you need to take away from it. And now, as a retailer, you are responsible for collecting sales and use tax if you have enough activity in a state. Okay. Typically, we get a lot of questions on Wayfair. So if you have some questions, please jump in, raise your hand, type it on the chat, or save it to the end. But if you have something specific to Wayfair, we can absolutely go over it. All right, so now we're going to jump into the next part, which is know your business. And this is key here, because two businesses that do the same thing, okay, so two businesses that sell widgets can go about their businesses very differently. They can process their businesses. That one can house inventory, one can be more of a drop shipment, right? You can have inventory in different locations. Your shipping details matter, okay, FOB, origin of destination. So the questions we got to ask ourselves, and this is a very high level and just a few of the more important ones. This is not an all-inclusive list, so there are other details about your business and how you do it that can affect your sales and use tax, but these are some things you need to know, right? So obviously you need to know, what do I sell? And what we mean by that is, are you selling multiple types of products, right? Products and services, bundled transactions. If you're selling into different industries, are there different industry exemptions that are common, so on and so forth. So what do you sell? How do you sell? So websites, your online website with your shopping cart. If you're selling through a marketplace, Amazon's, Etsy's, the fancy term now is marketplace facilitators. So if you're selling through one of those marketplaces, that will change things. Okay, or if you have a catalog or phone orders, all of these different things will affect whether or not you need to collect sales and use tax, how you collect it, and so on and so forth. Who do I sell to? Are you making retail sales? Are you making wholesale sales? Are your products taxable or exempt? I mentioned earlier, if it's a specific industry, are there a lot of industry-specific exemptions that you need to be aware of? So that sort of thing. You also need to make sure that if you are selling strictly wholesale, there's certain exemption resale certificates that you get. So knowing who you sell to is a big deal. Knowing what technologies that you have in place, your accounting systems, your ERP systems, which is your enterprise resource planning systems, your sales tax engines, which we're going to talk about later, whether you have these in place or not, right? Whether, depending on which one you have. So talking about the capabilities of your accounting systems, your ERPs, are you going to need to implement something else, or can your current systems handle what your obligations are? So some key things to consider there. And we touched on it earlier, shipping details. Are your customers picking up at your location, or does title pass when the goods are delivered? So a lot of those things will make or break the decision. Who has the collection responsibility? What about the tax rate? And all that good stuff. So knowing your business is a big part here. Okay, so now we're going to jump into the advisory services. So we've talked about, all right, we know what we do, we know what we sell, we know where we sell it to. So now what? And these are some things you're going to really have to make sure you know, whether you do it internally or you engage with some third party that's going to do it. These things you see listed on your screen here, the Nexus study, the product taxability study, jurisdiction registration, product mapping, and possibly VDAs, are all things that you're probably going to get into at some point in time when you're talking about, okay, you have a sales tax obligation and getting that up and running. So I'm just going to touch on each one of these, what they are, what the value of it is, and then we'll jump down to technology. But Nexus study, a lot of us are familiar with Nexus studies now, but if you're not, a Nexus study takes your activity throughout all the states and typically separated by product and by jurisdiction. And it gives you a decision of, do you have Nexus in these jurisdictions, yes or no? So it's telling you where your filing obligations and your collection obligations are. A product taxability study, what that does is that takes a list of your products, and you get a decision, yes or no, is this product taxable in this jurisdiction? And it comes out in a tabular matrix form. So if you're selling in 30 states and you have 5 different products, you would have a matrix that looks like 30 states, 5 products, and a taxability decision, yes or no, in each of those states. If you are selling a product that may have different tax rates, so some products, food, clothing, sometimes have reduced rates and that sort of thing, or flat rates, we could also include that in a product taxability study. Okay. Once you do your Nexus study and your product taxability study, so you know where your products are taxable, oftentimes you're not already registered in those states. So there can be a long list of jurisdiction registrations. Jurisdiction registrations can be a pain, and they're never fun to do. So a lot of times people decide to have somebody else do those for them, or at least help them out with that. So that's a jurisdiction registration. Product mapping. Product mappings come into place when you have your sales tax calculation engine and your sales tax compliance tools, your ERPs. Once you get this up and running, you have to map it. Okay, so you have to tell the systems what you're selling, where you're selling to, and if that's not done right, your sales tax collection can be wrong. And we've had several horror stories where that cost our clients a lot of money because it wasn't done right when they originally set it up. Okay, so product mapping is a service where you get help setting up the technology behind the scenes to make sure the correct tax and the correct rate is collected. A voluntary disclosure agreement. If a Nexus study, you realize you had Nexus prior to the time you're doing a Nexus study and you want to voluntarily remit, it makes sense to voluntarily remit the tax to the state that you haven't. Voluntary disclosure agreements have some added benefit that if you disclose the tax voluntarily, that you would not get otherwise if they come audit you. Okay, so that's one avenue. If you're in that boat, that's one avenue that you can do. So that is the advisory services. Again, there's a lot more advisory services that go into this stuff, but these are the probably the most prevalent we see and the ones that you're probably going to want to make sure you consider. Jumping down to technology's role, obviously technology has a huge role in all of our lives today, all of our businesses today, and that's true in sales tax as well. So these are 3 technology tools that you're gonna know if you're involved in e-commerce. You're gonna know what your ERP system is, your enterprise resource planning system, and this is your QuickBooks, right? This is your general ledger, and that has these ERP systems have a lot of different looks. ERP is a large bucket that encompasses all of these AP, AR systems, call it what you want. It is your ledger system, whether it's QuickBooks or one of these other cloud-based systems, all the way up to your Fortune 500 companies, your Oracles of the world. That's an ERP system. And what it does is it houses all your accounts receivable, your accounts payable, your products, and it just assists your business in everything that you do from an F&A standpoint. Okay. And a lot of the sales tax stuff is going to bolt onto your ERP system, just like your sales tax engine. Your sales tax engine is a sales tax software company. And what it does is it bolts onto whatever your ERP system, whether it's on the market, a homegrown system, or anything in between. Sales tax calculation engine takes your transaction. So your ERP talks to your sales tax engine, and based on the location of the sale, what the sale is, how it's mapped, it's going to return the amount of sales tax on the invoice that you should collect for that invoice. You guys, if you're already doing this, you probably don't even know all the details behind the scenes. That's what it does. And there's a lot of different versions of sales tax calculation engines. Some of the big names on the market are Vertex, Avalara, TaxJar, Sovos, and they all have their place in the market. They all do things a little different. Some are more complex than others. Some are more simpler than others. They charge you differently, different rates, depending on whether it's volume-based or revenue-based. So again, your details of your company, the who's, the what's, the where's, are going to tell you which one of these makes sense. And then lastly, right here, we have sales tax compliance tool. So once you do all the advisory services, once you have the technology in place and you're calculating tax, you have to file the sales tax return and you have to remit that tax over to the state. You need a mechanism in place to do that. And we're going to talk a little bit about that in a minute, about what your options are, what we see a lot of our clients do, what works well, what doesn't work well, and so on and so forth. But a compliance tool is just as important as the calculation engine. All right, so I probably covered a lot of this just then. All right, so we'll touch a little bit more on the sales tax calculation engine and the sales tax compliance tool. We talked a lot already about the calculation engine. One thing I definitely didn't cover probably as much as I would like to is the fact that your sales tax calculation engine, the product mapping that we talked about earlier, that has to be right. We all have heard the term garbage in, garbage out. If it's not set up correctly, you're leaving yourself and your company with a big risk and a big exposure because you're calculating it based on false information and false data. We see this a lot. And here's one thing I will say about the sales tax calculation engines is be careful if you're using a software company, make sure that your mappings are correct. And I would always advise having a second set of eyes on those mappings, at least on the front end, because if you don't, these things tend not to get looked at very often once they're set up, and they can go on a long time being incorrect. Some of your sales tax software companies, while they're good, they have their place in what they do. You got to keep in mind that these are sales tax software companies, and you have salespeople and implementation people doing it, not necessarily sales tax experts helping you out mapping and defining. And I'll give you a real quick example, and we'll move on. But the point is, make sure that you focus and you spend a lot of time and you do your due diligence on the sales tax calculation engine, okay? And some examples are your clothings of the world and your foods of the world, where the definition of food and candy and all that stuff changes from one state to the definition. So if you're onboarding with one of these sales tax calculation engines and they ask you what you sell and you say we sell food and they map it as food in all 50 states, there's a good chance it's going to be wrong, okay? And then your company is going to be on the hook for the difference if it is wrong. So just make sure you do your due diligence with your mapping of your sales tax calculation engine. Sales tax compliance tool, it goes into the sales tax return preparation and filing. So your compliance tool, whether there's a couple different options here, and depending on the circumstances, probably decides what's best for you. You can use the sales tax softwares as your compliance tool, okay? They have the data, they've calculated the returns, you pay them additional fee and they will file returns for you. They have their place again, but be careful with that, because if your product mapping is set up incorrectly, the software company is responsible for setting up your mapping and then they're responsible for filing your returns, there's no second set of eyes looking at your returns. And again, so I mentioned earlier, if it's set up wrong, nobody ever looks at it. it leaves you exposed going forward until you get audited, and then you're going to end up being on the hook for that money. So just be careful when you don't have somebody else looking at how you did and what you did. Some other options for your compliance tools is you can do it in-house. If you handle your sales and use tax in-house, what I would say is always have a sales tax compliance review done by a firm like Malden & Jenkins or whoever your local CPA firm is. Make sure you have a sales tax expert do the review, even if it's periodically, every 3 years, 5 years, 10 years, whatever that looks like, because it's always beneficial to have that second set of eyes. And that's where you're going to mitigate your risk, is having somebody that's unbiased looking at it from a third party, right? A different viewpoint. They come at it, they look at it from a different angle, and they identify things. So the point, just like it was on the product mapping, is make sure you're doing your due diligence and you have your process. And some things I've mentioned here a lot of times is when you have a sales and use tax return preparation, whether you're using the sales tax software, you're using a CPA firm like Sales Tax Simplified and Malden & Jenkins, or you're doing it in-house, make sure your process is documented. Okay, who's responsible for what? Okay, so here's steps 1, 2, 3 that we as a business are required to do. Here's steps 4 through 8 that the sales tax calculation engine does. Then steps 9 through 10 are on either us or the sales tax software or the CPA firm, whatever it is. Make sure you map it out. Who's responsible for what, so that if you have turnover, one of the biggest things that we hear all the time is turnover. And, this got missed because so-and-so left, or they were out on maternity leave, or that sort of thing. Make sure you have your process documented, who's responsible for what, and all that good stuff. So, all right, I've already talked past where I wanted to go, so we'll try to wrap it up. Time goes on. The biggest thing you want to make sure you do here is you don't set it and leave it. As your business grows, you're going to have Nexus in new states. Your Nexus footprint's going to change. Maybe you don't have Nexus in a state anymore. Maybe your salesperson that was killing it in the Northeast has retired, and the other salesperson either haven't been replaced or they're not as good. So maybe you don't have Nexus in that state anymore. Okay. So, keep an eye on these things. Just don't set it and forget about it. So constantly looking at your biggest business products. We see a lot of times where under audit, we find out that our clients are selling more things than they thought they were. And the last time we looked, they weren't, right? So the new products didn't get mapped correctly. They didn't get added to the list, and then they were kind of overlooked. So there's more to it on the time goes on, but the point is things change, and it does require an annual review. So with that, again, I told you earlier I was going to fly through it, and I did. Those are the key points, the high-level points. But I really do want to open up to you guys. You're on mute, so if you have any questions, please unmute yourself. I'll give you a second. If nobody jumps in, we did have a few that were emailed ahead of time that I'm happy to go over and read, just to maybe get the conversation spurred and going. But if you have a question, please jump right in, and now's the time to do so, or ask it on the chat function, either way. Give you just another few seconds. If nobody jumps in, I'll go ahead and start reading these. Maybe it'll spur some conversation for you guys. All right, so one question here is, our company has taken on the task of filing our own returns. What is our exposure to an audit by state? And I kind of touched on this a little bit, but if you're filing your own sales and use tax returns in-house, if it's done wrong, garbage in, garbage out, if it's not set up properly, then obviously your company is going to be on the hook. So it's hard for me to say what is your exposure, but I would say there's a potential for the exposure to be there if you're doing it in-house, only if you haven't had a CPA firm come in and do a sales tax compliance review. Once you have that review and you gain that next level of confidence, you're probably okay. But make sure you always have that periodic review. That would be my advice there. Next question here is, our business sells products through a marketplace, and we sell through our own website. We are submitting sales tax returns for sales through our website and phone orders. Do we also need to be concerned about tax collected through a marketplace? And that's kind of a loaded question. Marketplace facilitators, the Amazons of the world, Etsy's, and by the way, marketplace now is a big umbrella, and there's a lot of places that didn't realize they were considered marketplaces that are now considered marketplaces, and even Facebook Marketplace and those sort of things. They can be considered in certain states depending on how the state defines the marketplace. But to answer your question, a marketplace typically is required to collect the sales tax on your behalf and file sales tax returns on your behalf. So typically you will not need to file your own sales tax returns for the sales related through that marketplace. But if you make other sales, as this question asked, if you make other sales into that same state, then you're responsible for those. And what I will say is be careful, because we've seen marketplaces create Nexus for our clients in states where the clients otherwise would not have, because a lot of times Amazon will house their inventory. And if Amazon's housing it, you don't have control over where they're putting it. And now you have products in other states. So just keep that in mind. And when you're looking at Nexus for your sales through a marketplace facilitator in a state, most states will require your sales through the marketplace plus your other sales in a combination to see if you need to file in that state or not. So keep that in mind. And when a marketplace has to collect sales tax, they have their own Nexus considerations. So even though you may only make $5,000 of sales through that marketplace, their total sales may be enough to give them Nexus, and then they have to collect tax on your $5,000 as well. Okay. Let's see. I got a couple more minutes. I'm not in a hurry, so I'll go ahead and read these other two as well. And then if you guys have anything, please jump in. What is the easiest way to figure out if we have established Nexus in other states? We mentioned that early on, a Nexus study. You can, the rules are not all that complicated. You can probably do the research yourself to find out, at least at a high level enough, are you close enough to know whether or not you need to know for sure. The key here is if you're selling in a lot of states, it can be fairly cumbersome to pull all the rules for all the states, put it all together, analyze it, and that's where you need typically a study. If you're talking about one or two states, it's not all that big a deal. Just knowing what your activity is, and then knowing what the states you're concerned with, what their rules are, and you can usually get there from that. And the last question that I had that was emailed ahead of time is, do I have a favorite sales tax collection engine that I would recommend? And personally, I have favorites, but I'll say this. They all have their place. Some, we did touch on that a little bit too. Some are more complex than others. Some are more simplistic than others. Some have a better user interface. Some are a little bit more difficult to set up. Some work better with homegrown systems. Some have a lot of connectors for all the big marketplace ERP stuff. So really, we help our clients if we have a client that needs to get a sales and use tax operation up and running. They got to start collecting tax on their orders. A lot of times the decision of which calculation engine to use, we recommend that based on the details. So whether they're a low volume, high dollar type business, or whether they're a high volume, low dollar, a lot of different products in a lot of different states versus one or two products in a few states, all of that comes into consideration to when we will recommend one or the other. And we've recommended several before, so it's not always the same answer for everybody, because what we try to do is we try to do what's best for them and what's best for your business. So that may matter, but yeah, there's a few that I do prefer. To answer the question, we use Vertex a lot, and Vertex is one that will actually bill based on your gross revenue and not based on volume. I know Avalara bills you based on volume. So if you're a high volume online retailer, Avalara will bill you based on that, and Vertex does not. So that's one thing to consider. The price does not typically make a big difference between those two, but it can be beneficial. So some things to keep in mind. All right, those are the 4 questions that I got emailed ahead of time. Is anybody, a lot of you guys, I don't know that anybody's jumped off yet. Is there anything that you guys specifically wanted to discuss? Question? Okay, I see one that we have on the chat. What about businesses that are using a platform website such as Shopify to sell products? Is the sales tax for each state built into that software? So good question. Shopify has its own tax calculation engine in it, and it can calculate the sales tax for you. Shopify, to my knowledge, does not file the sales tax returns for you. So what you could typically end up doing is if you have a platform like Shopify, You may not necessarily have to have your own sales tax calculation engine bolt onto your website, but you still have to file the tax returns. I hope that answers your question. And if you want to unmute yourself or type another question, a follow-up question, please feel free to do so. Anybody else? Anything else? I hope you guys found this helpful. Again, it was very high level. It's the goal here is to introduce you to a lot of these things. Is to make sure that if you went through this, or you're going to go through this, or something like that, that you and we had another question come in, but that you make sure you've hit all these high points. There's, again, we could talk all day long about any one of these things, and we see it every day. And so if you have something like that, I'd love to get in that with you and talk it out, make sure you guys are comfortable with that. We do have another question. Can you confirm the taxable sales of a company and the separate taxable sales of a marketplace facilitator, third-party e-commerce, must be reported on the same sales tax return, ? Varies by state, ? I think I understand your question, and I think what you're asking is, if you make sales through a marketplace facilitator, and that's your Amazons of the world, there's a lot of them, but Amazon's, we all know Amazon. If you make sales through Amazon and you also make sales through your company website or your salespeople, do you put those sales on the same return? If and when, so my answer is going to be two-pronged here. If that marketplace facilitator is filing sales tax returns on your behalf, my answer is no. You do not put that on. Now, if for whatever reason, let's say a state is unclear, you've called them, they can't give you a correct answer, they don't have a lot of guidance out there of whether you should or should not, you can always put those sales on a sales tax return and then lump them in the deductions or the exemptions. I do not advise you to do that. Some people are very conservative and they want to do that. I don't advise that, because if you get audited, the state's going to come and look for exemption certificates for those, and you're not going to have them. And yeah, you got a good reason why they're not on there, and you can explain that. But typically, those are not supposed to be put on the same return. So your sales through Amazon, say you have 100,000 through Amazon and 50,000 through your website in a certain state, your return that you're filing with the state is typically $50,000. It would not be $150,000. I think that's your question. If it's not, please respond or unmute yourself. But I think you said that makes sense. I think that's your question, and that's typically how it goes. But let's keep in mind here, if you're using a smaller marketplace, a marketplace has the same Nexus considerations as you would as a private business. So if they are a small marketplace and they don't have Nexus in that state, say it's a smaller state and they don't have a lot of clients selling customers and products to that state, but you have Nexus based on your other sales in that state, you may actually have to report your marketplace sales on your own return if the marketplace does not. So make sure you keep that separate, that the sales tax needs to be collected and reported if you have Nexus. So if the marketplace doesn't, then you would have to put it on your return. I enjoyed it. I love talking about this stuff. Not many of us do, but I do. So if you have any questions and you want to, touch base afterwards, feel free. We're here. All our contact information was included. So I really appreciate you guys being here with us today, jumping on, your patience with us. And I hope you found it helpful.